Markets now, the JSE ended off the day over 2.5% in the green, with gains across most of the local bourse. Let's bring in Makwe Masilela from Makwe Fund Managers to help us unpack why we saw the kind of moves we saw today. A very good evening to you, Makwe, and as always, thank you for joining us. Over 2.5% to end off the trading day, with gains across most of the JSE. What were the big drivers today?
You know, markets, we know that for the better part of this year, they've been driven by central bankers, whether they're going to continue increasing interest rates or cut or start pausing. So markets were looking forward to the US CPI number because that was also going to give us some assurance or maybe make things worse that the US central bank will either continue to increase or continue to pause. And as we all know that the US central bank is a de facto leader when it comes to setting interest rates, but the inflation came in cooler than expected. So markets were celebrating that, and that itself was more of a reassurance that the central bank, most likely, they will continue to pause. Hence, we've seen stocks going up. Hence, we've seen the US dollar going down, the rand benefiting out of that. And as we know, we've seen commodity prices as well going up because most of them are priced in US dollars. So a weaker US dollar makes it affordable for holders of other currencies to be able to buy those commodities.
Yeah, absolutely. And I suppose it's something that may bode well for South Africa as we enter the festive season. Fuel prices hopefully staying a little lower for longer.
Definitely, and given what is happening with oil prices as well, yes, they did manage to tick up a little bit because they're also priced in US dollars, but there's going to be a question of what's going to happen with the issue of the Middle East, the tension between Israel and Hamas, whether will it stay localized or not. But yes, as it stands now, we can celebrate and expect to see fuel prices to go down, and the very same oil prices are the ones that also help the US inflation to go down.
Yeah. Company updates now. We've got Self-Storage Real Estate Investment Trust that posting their results today. They did well in both their rental and property arms. Obviously, many businesses in the country relying on their properties as there's increased distribution with online sales, but also the warehouses and the opportunity to actually store whatever products that they're offering consumers.
Definitely, and also they will continue to benefit from this whole thing of densification that will increase demand. And we know the guys, they've got almost 97 properties, that's 16 South Africa, 37 in the UK, and they're valued at almost 16.2 billion. Also, what was encouraging, the occupancy sitting at almost 89.1%. And also, when you look into the South African rental growth, increasing by 9.6%, in the UK by 5.1%, and the guys managed to increase their property revenue by almost 16.9%. So that's not too bad, even though their dividend only increased by a mere 2.2%, but their profits as headline earnings per share fell by 30%.
Let's talk about Liberty 2 Degrees before we move on. They're delisting on the JSE. I asked you a reason earlier on as to why we saw this, but of course there was a Liberty transaction with Standard Bank a little while ago, and that's got something to do with that.
Definitely. Remember, Liberty had major shares in Liberty 2 Degrees, and there was just a small float when it comes to the JSE listing. By the way, it was listed just over 6 years back. So Liberty itself as a group bought the minorities from Liberty 2 Degrees. And as you said, Liberty is now part of Standard Bank. So they will all be owned by the greater Standard Bank group. And the guys, they've got nice assets, your Nelson Mandela Square, stuff like that. So yes, those assets are good. Unfortunately, the share itself didn't do that great, but it's all because of the bigger transaction that happened earlier.
Before we move on to some international news in Tencent, Makwe, I have to ask you, as a market participant, does it not worry you the amount of delistings that we've seen on the JSE now for various reasons, and whether companies still see value on the local bourse?
It does worry us and also the boss itself, because we can see now and then they try to make things much easier because we know the listing costs are just so high. And we've seen the latest one is when it comes to the auditors, that you don't have to be approved by them as long as you've been approved by the regulatory body of the auditors. And what it does to us as market participants is that you've got fewer and less companies to be able to buy into them. Now lately we've seen that most of the tech stocks we're doing great in the US, stuff like that back home here, you don't have that kind of things. But fortunately, we've got a way of able to tap into that. But the long and short is that fewer companies to be able to trade on is not good for our market.
Let's speak Tencent now. That investment by Naspers and Prosus, they're releasing their third quarter earnings today. The music component of the business doing well, but overall revenue down. Your thoughts on that update that was released? A lot of local investors watch this one closely.
Definitely. It is down, their revenue, but better than expected. And yes, we've seen the music doing great. And it's all maybe because they bundled these karaoke and live streaming concerts into one. I think they increased the numbers to almost 103 million from 85 in their previous quarter. And unfortunately, when it comes to their social entertainment, there has been a significant drop of almost 50%. And all because we know that China itself has been working and clamping on this gambling or the online gambling. So that shadow still hangs over them.
Absolutely. Makwe, as always, thank you very much for that update. That is Makwe Masilela from Makwe Fund Managers, wrapping up the movement on the JSE today. We'll be back.